It's the Black Real Estate Dialogue. Tune in, tune in, tune in.
So for those who are super new to this, you have a lot of people you're working with when you're buying a property, whether it's investment, whether it's where you're gonna live at, house hack, whatever.
Mm-hmm.
Where does the loan officer fall into things? Because some people say, oh, I'm going to Bank of America or whatever, but where does the loan officer specifically fall into the picture?
So they're basically the first person you interact with. And so whether you're going online, like to find a lender, and when you dial that number, a loan officer is who picks up. That's why I said they're a salesperson. Their goal is to sell you on the benefits of their company. A lot of times when people call or they're looking for a mortgage, the number one thing people always ask me is what's your rate? Which that's not a goodest question as folks seem to think it is, because literally a loan officer can tell you any rate that you want to hear, and they're right. Because I would say, as a loan officer, maybe 1 out of 10 times when someone asks me about what your rates are, they're asking me like what the points are. And so if you know what points are basically prepaid interest. And so let's say like right now the market rate is a 5.000. A loan officer can quote you a 4.500 to win your business, and that would be accurate. If you don't ask for like what points are associated with that interest rate, you may get hooked into like a bad deal because you don't understand that that interest rate is being brought down with points. But yeah, the loan officers basically they're the tip of the spear. They're the first person you interact with in the sales pipeline when it comes to getting a mortgage.
And how does somebody find the right loan officer?
So I would say by doing your research. So there are a couple of questions I always recommend you asking your loan officer. Is one, how long you've been in the business? There's no right answer there. Someone being in the business for 20 years or someone being in the business for 1 year, that's not bad. Obviously, the person that's been there 20 years probably has a little bit more experience, but it gives you an idea of kind of who you're working with. Then two, I kind of ask them, what loan programs do you specialize in? Because everyone's going to tell you they work with all loan programs, but different loan programs have different parameters. So I'll give an example. As a loan officer for 5 years, I had access to USDA loans, but I never did a single USDA loan. So if you were looking to have a USDA loan done, I was not the person for you. But I'm also not going to say, hey, I'm not going to say, hey, go to someone else. I'm going to try to figure it out as we go along. But you should ask them what loan programs they specialize in. All loan officers do conventional loans, but all loan officers do not know the guidelines when it comes to FHA, USDA, and VA. So if you're looking at one of those, USDA, VA, or FHA, you probably want to work with a loan officer that's very specific. Knows kind of can get in the weeds with those details. Three, you should ask them, like, what are your working hours? So somewhat loan officers just literally work 9 to 5. And it's either because they're in a call center and they only have access to the customers 9 to 5 because you have to call them on the phone, or sometimes they're very seasoned veterans. They're like, hey, I put in the work. I used to take calls on Saturdays, Sundays, and all that, but I got my established clientele base and I'm just working 9 to 5, but that works for you, great. If it doesn't, hey, I got a big book of business. I'm all good. And so you want to make sure that you know their working hours, because statistically you're going to be looking for homes on Saturdays and Sundays or after hours if you're working 9 to 5 like the majority of America does. And if that's not when they're available, they're not the loan officer for you, no matter how smart they are. And then I just ask them just basically how much time do they have to explain to you the basics? Because like I said, going back to that seasoned like loan officer, sometimes they just want to deal with people that know what they're doing. Sometimes you have loan officers that are actually going to break down the guidelines and stuff for you. So you really want to make sure you're interviewing that loan officer to make sure they're a good fit for you. A lot of times folks just go with the first person they talk to, or they'll just go with somebody that their friend recommended.
Got you. So now, is the loan officer the person who is connecting the client to banks? Do they have a relationship with banks to get the loan products? Like how I guess, someone who was just starting out, all right, so now we know what a loan officer is, but when it comes to like getting the actual loan, when it comes to getting the money for the property, what does the loan officer do next? Like what's that connection?
Yeah, so there are two different type of lenders. There's direct lenders and they're brokers. So if you're like working with like a Chase, Wells Fargo, Bank of America, even like Rocket Mortgage, somebody like that, those are direct lenders, meaning that when you're talking to somebody at Chase, the money is coming from Chase. they're also mortgage brokers whose job is to broker the deal. So they will shop your scenario to a bunch of different lenders. So they're not the ones bringing the money to the table, but they're shopping your scenario to a bunch of different lenders. And so there are pros and cons when it comes to direct lenders and brokers. If you ask a broker, they'll tell you the brokers are way better and faster. Sometimes they are, sometimes they aren't. I will say this: when you work with a direct lender, like I'm just gonna keep saying Chase. I used to work for Chase, so I can talk about them a little bit more in depth than other lenders. But when it comes to working with a direct lender, they're restricted to their guidelines. So if you're going to Chase, you're talking to a loan officer at Chase. Chase has certain overlays, and so like if for an FHA loan at Chase, you may need a 640 credit score. There's no wiggle room there with Chase with that 640 credit score. Either you got it or you don't. If you're talking to a broker and let's say you have a 620 credit score, or let's say you have a 600 credit score, their broker can shop you around to other different lenders that don't have overlays or restrictions. So let me jump back. So overlays are guidelines that lenders put on top of the basic requirements. So with an FHA loan, the minimum credit score, like I think I said before, is 500 with a 7 or with a 579 or less. 580 above is 3.5%. But lenders put actual guidelines or restrictions on top of those. And so your broker can shop you around to different investors that are able to kind of meet your guidelines. And so you may have a better chance with a broker if you have some credit challenges. But I will say that the other side of the coin is, one of the benefits of working with like let's say Wells Fargo, is that they're in the news a lot for some unsavory things. But here's the thing: they're in the news a lot. One, for they have some bad policies and stuff going on, but two, they're in the news a lot because they're a big name. They're brokers that are doing a lot of unsavory or bad things as well, but they don't make the headlines like a Wells Fargo or Chase will, because they're not looked at as hard. They're not looked at as hard because they're not as big of a group. And I point that out to say, I've seen some of the worst deals ever in my life from brokers. Because if you go to like Chase, everyone's going to get pretty much the same deal. But brokers, for the good side and the bad side, they have a lot more leeway. They may be able to give you a lot better deal, but if you don't know what you're doing, they can take advantage of you a lot, because there's not the same oversight. So when I go back to talking about mortgage points, so when loan officers at Chase, everyone makes kind of the same commission a loan. If it's a $300,000 loan, you're going to make a certain amount of basis points no matter what. If you're working with a broker, they have different commission scales, and they'll get paid off of like the fees associated with the loan. So if you don't know what you're looking at, so when I go back to folks being so enamored with interest rates, so if you let's say you have like a 5.00 interest rate, and that's all you're focused on and not the points, that broker can tack on certain like broker fees and points and all that on top of that, and they'll make more money off of those fees. And that's how they'll get more commission, is by tacking like more fees onto the loan. And to be clear, all brokers don't do this, but I have seen some horrible deals for folks that have just been completely taken advantage of by brokers, because they know there's essentially no or very, very little oversight compared to some of the big banks.
Got it. So as far as, so you mentioned people being interested in like just a 5% interest rate, but not what a broker could potentially be tacking on. Let's say somebody does notice, hey, like you're putting this fee on it. Is there anything the prospective homeowner can do about that or can say about that? Or is it just kind of is what it is? Yeah, so the only way to accurately compare rates to know if you got a good deal or a bad deal is to get another quote. That's what I tell every single person is when folks are like, hey, is this a good quote? I'm like, it's in comparison to something else. And so a lot of times, like, folks are scared to get their credit pulled by more than one lender, because there's this concept out here. The whole credit repair is a whole nother thing where folks are so excited about credit inquiries. But here's the thing when it comes to getting your credit pulled. And you can go to the Consumer Financial Protection Bureau, CFPB. You go to their website and it says this. You can see this on the Experian site, Equifax site, and TransUnion site as well. For a mortgage or for a car, like any credit pull within a 45-day time frame counts as one hit. So whether you go to Chase, or you go to your local broker, or you go to 10 other brokers,
it all counts as one inquiry. It will appear on your credit report 10 times, but it only counts against your credit score as if it was one inquiry. And so literally the only way to know if you got a good deal or not is to go get more than one quote. So like if you see one lender's quoting you a 5.000 and there's 1.5 points on it, and then you see another lender's quoting you a 5.000 and there's 0.5 points on it, you know that one deal is better than the other. That's literally the only way to compare quotes. And so just kind of real quick, if you actually have you're under contract, you have a loan estimate, in order to actually compare quotes, you want to look at block A and block B on your loan estimate. The first one is lender fees, and the second one is lender specific fees. Whenever you compare quotes, those are the only two blocks that matter on the loan estimate when it comes to comparing fees. And also, in order to compare rates, you have to be comparing the exact same interest rate. So like one lender's quoting you like a 5.000 and there's like 1.5 basis points to it. And then another one has like a 4.875 and there's like 1.9 points to it. You can't compare those rates. Ask them to quote you, ask one lender either to come up on the interest rate or to come down on the interest rate. And that's how you actually compare the points on the loan, is you have to be looking at the exact same interest rate for each loan estimate.
What's up, y'all? Sam here from the Black Real Estate Dialogue podcast. Thank you so much for watching another episode. Definitely take a moment to subscribe. Make sure you like this video. Also, visit our website, blackrealestatedialogue.com, and follow on Instagram @Black Real Estate Dialogue. Talk to you soon.